I appreciate you guys supporting Nick tonight and talking about Darwin. So a lot of people out there on Discord were having questions about Darwin, and I still have questions about him, and I'm sure Nick still does. It's a complicated
Oh yeah.
machine, right? It's a complicated machine. It's unlike anything that you've probably seen out there. I will say this: the more I uncover about it, the more I like it. But at first glance, I wasn't ready to jump in. I mean, back in like
Yeah, same.
November when I was introduced to it, I was like, no, it had a lot more no's than yeses. It wasn't until just recently when I had an opportunity to actually discuss with Ignacio, one of the owners, and peel back the curtain, so to speak, and really dive into what it is that they're accomplishing, what there is that they're doing, what they're putting together, all that kind of stuff. There's a lot of moving parts. And when it seems like when I jumped on, it was just like maybe at the same time Nick jumped on, maybe a little bit later. And we said, why not? Why not? Let's try it. Let's give it a shot, right? And since then, I think I think your guys will I think you guys will discover that not only is Darwin unique to any. I mean, you can't really put it up against a traditional prop firm. Can't put it up against a hedge fund. It's just unique. But I think you'll discover that as well as the platform is unique, so is how to trade it, right? I mean, let's just be honest here before we even get started. If Nick has seen success with it, you know
Shut
it's
up. I already know
you
where
know you
you're
can too. No, just kidding.
going. That's true
I'm just kidding.
though.
Oh, and hey, Spicy, I'm glad you're here. So, I wanted to I wanted to talk about your questions that you had this morning. So I apologize for missing that, but I will jump on tomorrow. So if you want to be there tomorrow morning, I will be on there tomorrow to help address the questions that you asked. So, so just if you can make it, I'll talk about it. So
I'll
I
be
was
there.
going to do that
Thanks.
today.
Glad you're feeling better.
Oh yeah, I'm feeling really good enough to joke about Nick. So without further ado, Nick, I know you wanted to, and other people who are trading it to kind of chime in, but why don't you kind of segue, take this and see where you want it to go, I guess. So I'll turn it over to
Yeah.
you, I guess.
Okay, cool. Yeah, so I know that like we're pivoting towards Darwin and it's like Dave said, it's different and there's some gotchas and the interface is pretty overwhelming. So I thought, I've had both some success with it and some frustrations. So I was thinking it might be good to just share kind of like a fellow trader's perspective on what I've been doing, what I discovered. And then yeah, if anybody who also does it, I think maybe possibly Pete's coming later. He might have something to say. Josh, I know traded it some. Dave, you've traded it some. So, but I'll get us started. This isn't like anything authoritative. It's just more me talking about my experience. So I'll share. I made a pretty sad PowerPoint that has nothing on it.
Oh,
It's more like this is what I want to talk about than actual informational slides. All right. Darwin X Zero. So Darwin X Zero is different from Darwin X. That was the first confusing thing. They have two products. Darwin X was the original product, and I think it's the broker side of things that like Dave was kind of mentioning the other day. Zero is like the thing that Americans get to use. It's uh, it I tried looking up the differences and it wasn't as straightforward as I thought it would be, so I didn't make a little bulleted list, but it sounded like Darwin X Zero is more their pure product of like removing all like there's always been like this conflict of interest type of thing where it's like, oh, is my broker really out for my best interest? Because they're getting commissions on my trades. They might be capitalizing on the spread. And I think Darwin X Zero just eliminated all of that. It's mostly simulated, but it's like a training ground for you to learn how to be a professional trader to graduate on into the gold that we've talked about a lot, and then actually take on people's money. So just know that like when I first signed up, I was on DarwinX's website trying to sign up and it wouldn't let me because I'm an American and that was very confusing. So it's DarwinZero is what I've been doing.
And if you guys haven't signed up, I will throw the link out there too. So it'll take you right there. And it does save you, I don't know, like $90 to sign up to this link. So I'll throw
Watch
that
out
out there
which
for you
coupon
guys.
you select.
That's right. You don't want to pull an ed. So make sure that you have the coupon name or trade the fund in order to get that deal. So
All right. Okay, so I'm gonna show you guys the interface. I mean, some of you have signed up, so you've probably seen it. Hopefully there's nothing in here that I shouldn't show. Okay, so this is what it looks like for you as a person who is logging into your own DarwinX. We just had a new month start, so this is May 1st. I haven't
So
traded my
we,
Darwin stuff. I don't.
we're seeing your notes, not your slide.
You've seen my
yeah, so
notes.
we know what you're going to talk
Oh,
about
I'm
next.
sharing the other screen. Okay. Well, how embarrassing. Now you can see my desktop icon.
Whoa. I don't know what we're seeing, but it's a lot of screenshots.
Don't look at it.
I can't pick out your social security number and your bank statement.
Where did it go? All right, hold on.
Is that like a beautiful mind desktop or?
Yeah.
Yeah, that's every
Hawaii.
screenshot I've ever taken. I lost my the thing that was just showing. Okay, it was full screen. That's right. Oh, no. So, okay. So this is what you see when you first log into DarwinX. So my ticker is DTF. I'm ranked 1,812th. This is like if your DarwinX is a stock, this is kind of like your stock price. It seems to be related to your percentage return. So mine's like 8.39% right now. I have $60,000 allocated to me, and I'm starting May 1st. So, and then let's see, over here, you kind of have this meter thing. If you get to 75, you're allocated for like, I think it starts with 25,000 or 30,000. I started the month at 63.13. I think that might be what everyone starts at. I'm not sure. And you can use this rating calculator here to estimate what kind of return you need to get allocated this month. So
let me just
now,
emphasize, if you don't mind, let me emphasize this resets every single month. And
yes.
So you could have been number one yesterday and then 18-12 today, right? Because that's just taking your trading for today out of everybody else in Darwin who traded today or those who did not, just your today rating. Does that make sense? And it's only calculated on one day. I think somebody hit me up and said, hey, what happened? Yesterday I was at ... and now today I'm at what's going on, right? So just want to make sure that that's emphasized. Your rating resets every single month, right?
Yes. That is, yeah, and I like was comparing. I think I looked up a few of ours, and we're all basically starting from the same place right now. So I have zero returns for this month. So like if I were to try to find out, oh, I got a 4%, that would take me up to a 79.11 rating, and you only need 75 to get allocated. So that would put me at the $30,000 of allocation. And my expected rank, which is not always like exactly what it is, but it would be around 307. So this was like, I mean, when I was playing around with this calculator in the first place, this was really encouraging because 4% is around what I shoot for with making 0.25 a day. So if I could make 0.25 a day, 4 days a week for 4 weeks, that would be 4%. So this was like kind of standard for like what we expect here at Trade the Fund. And that's already ranked 307. So that was like pretty encouraging. And then when I first started out, which we'll go back to, but like my multiplier was really high. So when I was making 0.2, it would multiply it by 3. So it would be 0.6. And sometimes, I'd make like 0.5% just trading the way we trade. And that would be 1.5 or something. So it was, my returns were really high. And you can see in January, I finished with like 6%. And then I think in February, I was on track for like 6% or 5% as well, which was like pretty good with that multiplier. And so I feel like they're not very harsh on, like, it's not like you have to do something super crazy to rank up, to get allocated, to make money. Like for what I've seen, for what we do, typically it was pretty effective and translated really well to like the rankings. And like Dave mentioned yesterday morning, my highest ranking was 97. I think I finished the month at 97, but I think at one point I was ranked like 50th or 44th or something. Like it was a temporary position. And now obviously, like we said, it goes away every month, but all that to say, it's possible. So a couple things. So that's that. I use this a lot, this monthly
Can
returns.
I just add one thing?
Yeah, of course.
The most important things to look at in my mind, or what I found, correct me if I'm wrong if you do something different, is my risk, my grading, and then the ranking. Those are the 3 most important things that I look at. And I probably look at this as 1, this is 2, and this is 3, right? Even though this fluctuates daily, if you hit 75 one time, you'll get allocation. So if you hit 75, and at least in my experience, I hit 75 week 3, and then I dipped below to like 72, and I was like, oh, am I gonna get it? And so I made a mistake of like swinging for the fences and getting aggressive to get it back to 75, and that was a mistake. Because I actually went down because my risk went down because I swung for the fences because I didn't know. And so my risk went down. So it made it even harder to get this up. And I still got allocation because I had hit that one day in the month. So to me, those are the most 3 important things to do.
What does that 75 mean?
It just means that you've reached the
I
guaranteed
mean, how is it
allocation
computed?
rating
How do you
of
get it?
It's the current rating of, it's kind of like your Sharpe ratio, the best thing I would say.
Okay.
So it's correlated with this number. So these guys are correlated together with your ranking, right?
Thank you.
So
Yeah.
sorry, Nick, I didn't mean to interrupt. I
Oh
was
no,
just
you're
saying,
good. I mean, I think that's what's important. Is like what we find is these are overwhelming screens. There's a lot. So
oh yeah,
figuring out what's happening here is like half the time I've spent trying to understand what's going on. But yeah, Ed, I've seen that ranking go up as I make returns. Like if the rating goes up and the ranking goes down, so you get higher up in the rankings. But like if I had like 0.10, it would go from 63 to like 65. And then if I had 0.5 or 1% return, it'd probably be 70. And you can use that calculator to estimate that. It'll show you like oh, I forgot these returns in a month. Um, so another thing about Darwin X is like you are copy trading. So you get your credentials, you go to MT5 and you put them in, and you have $100,000 account. Okay, so that $100,000 account is not this. It's you're copying from that account into your Darwin. So they are it's just like what we're doing with our, like if you were to use like the meta quotes demo and then copy into your prop firm, it's like we are copying. You're copying at a multiplier of this over here. Like whatever you have down here, that's your multiplier. But unlike FX Blue, it's not fixed. So you can be mid trade, and the Darwin X risk engine can decide that you are now too risky, and they will start lowering the copying ratio, and they'll even release some of your position. Like they'll downsize. And so this view here, this little box, you can click it, and if I was in trades right now, it would show me my contracts here. So it might say like, I'm in 3 lots, but my Darwin might be in only 1 lot. And then as I get riskier, you can see this actually drop. It'll go down to like half a lot or whatever the risk engine decides makes sense. There's some videos on your value at risk, your VAR. So Darwin targets a 6.5% risk. I have no idea how VAR works. I've tried to read it a couple times and it's very confusing to me. So I just know that they try to do some math and keep your risk around 6.5%. They base that on, I think, the S&P 500. So if you were to just buy and hold S&P 500, you would inherently have like a 6.5% VAR. And they just believe if you are, for your Darwin to be worth investing in, you have to be better than the S&P 500. Otherwise, you could just put your money in the S&P 500. So you would be wasting your time to be, putting the bulk for somebody else for putting the bulk of their money there. So anyway, they try to do better. So that's where they target that. So when I first started out, I traded really small. I was only making like 5 pips, maybe 10 pips, and I just call it a day and I just leave it alone. So when I got my first calibration ended, my current risk ratio was like 3.7 or something like that. Because I was so small and not risky, they will multiply you to, they want you to risk 6.5. So if you trade too small, they'll multiply you up, so you risk more. If you trade too big, they'll multiply you down, so you risk less. So they don't just want to, they want you like kind of right at that middle. So they multiplied me to be bigger. And then, so one day I, had a running market go against me and I just kept layering in. Well, that was super risky, right? Like I was adding all these contracts. I got really heavy. And that like was the first time my multiplier started taking a hit. And I just kept doing that. After that, you're just like, oh, whatever, I already ruined it. So you just keep doing it and you keep doing it. And then now, as you can see, my multiplier is down to 1/4. What that effectively means is like I have to make 1% to make, the 0.23 basically. Which is like it's fine, like if so it's just kind of like it's if your strategy is inherently like big risk, but you like it and it's net profitable, then it's like, okay, well, that's what it is. I think Darwin is really big on just have your strategy, whatever it is, and just trade it. Like, don't worry.
Big on consistency.
Yeah, just trade your strategy every day.
If you're making 1%, 1%, 1%, 10%, it doesn't matter to them. You had a great day of 10%, but it doesn't matter to them. Same as 1%, 1%, take a loss for 5%. It doesn't matter to them. It's the consistency. And so that's why I think at the beginning, Nick said it really works well with the trade the fund as we're going for 1/4% a day. In fact, I'd highly, and I'm going to present more on different strategies and techniques come Friday of how to trade Darwin. But if there's ever a model that promotes what I say all the time, which is get in, get out, and get done, Darwin's that. This is not something you want to trade 8 hours a day every day. The more money you make in Darwin might not be in your favor.
Yeah, true. I'm not positive, but I feel like it treated the fact that I was like trading more, even though I was still trading small, I started trading more often and I was making more profit in a day. And I feel like it maybe read that as more risk and started decreasing my multiplier, which was weird. But I was like, well, I'm not being consistent, I guess. Um, but yeah, like you don't, I mean, unless you always want to like add into your losers as your strategy, I would like do what we've been doing lately, which is like get out of them as soon as you realize they're lower than 50%. Don't like hold on and hope and pray. And like Darwin, it's okay. Like there's no risking out of this fund. Like I've let, I think somebody asked, I've let this thing draw down to like minus 20% and then let it come back the next day. Like nothing crazy happens to you. They don't kick you out or anything. It's not a great idea because your multiplier takes a hit. And because like Darwin sees you're at minus 20% and then starts cutting. So now you're in 10 contracts in your MT5 and Darwin's only in 5 because you were so risky. Then you get back to break even and you get out in MT5 and you're like, whoo, I did it. But like Darwin's still negative because they lightened the position on you halfway through. So break even isn't easy to see between the two. It's not like straightforward because like on your MT5, you're looking at your break even line, but you don't realize that like in your copy account, you're in less contracts than that. And they're like top heavy and or something like, it's like you're in 0.5s at the top and then 0.2s down at the bottom and then a 0.1 at the very bottom. And it's like, that didn't, that didn't translate to the break even line the way we thought it would. So that's like kind of the biggest gotcha where you're super confused because you thought you made it all up and you made your 1% for the day and you come in here and you're still negative with your returns for the day. There's some cool, like they do a lot of statistics, drawdown analysis, best and worst days. Those are pretty cool. There's like, I think it's in strategy analysis. There's a tile one. This tile is pretty interesting. I haven't drawn meaningful conclusions from it, but I looked at Dave's and his is like a really interesting shape. It's like really straight up and down, like right here on the loss side between 0 and 10 pips. So it's like what I got from that, Dave, is that no matter how much time you're in a trade, you only lose between 0 and 10 pips on it. So somehow you don't have any of these big losers over here. But what I noticed for myself is like as time goes, I have bigger losses or something like that as I let it run longer. I don't know. Anyway, you guys can take a look at it. This one is like probably the clue to you got risky and blew up your multiplier, but I don't know quite how to read it. But this is a measure of your min and max bar and where your Darwin is tracking in it. And you can see like I started off down here, very little VAR, monthly VAR of 1.17. And then here it's like between 1.4 and 0.89. So pretty narrow range down at the bottom. And then it just started like blowing up. Like, and now it's up here where my VAR is like 25%. So I think that basically just means I got way riskier with my trading. And then my multiplier decreased correspondingly. No clue what monthly rotation is. So I haven't ever gotten like a payout. That's basically because so I think the payouts, maybe like this will be more clear whenever like Dave presents on Friday or the Darwin guy talks about it, but they seem to be quarterly. And I'm not exactly sure when the quarter starts, but my first allocation came February 1st. And I had a thing that said basically I could have money on April 1st. Well, at the end of very end, last day of February 29th, I basically blew the month down to 0.43 from like, I don't know, 3 or 4%. And then March was like that really tough month where we had all those runners. And I like had 5, I think, of those days where the market just didn't turn around. And then April I've been coming back, but like because of these 2 months, I didn't really have any profits to withdraw from. So payments, allocations, so you can see, so you can see here, like it gives me a little $0 euro thing on July the 1st, I guess. So I guess that's the next time I could maybe get paid. Before it used to just be on like April the 1st. There was like a dollar thing. And when I was up going into the month, it had money there. It was like 200 euros or something like that. And then after I lost all my stuff, then it was back down to 0.
So just so you know, you have to, in order to get your negative $1,400. So you're negative 1.5%. So that's not big. That's not a big deal. So
Yeah.
1.5% to make that up is pretty good. Do you know what I mean?
Yeah,
So,
yeah. And I don't know, like there's something where
excuse me,
that stuff
more,
resets, but I don't
yeah.
know. I don't know when or how. It's something to do with like losing your
So
allocation.
yeah, so whenever you receive allocation, that's good for 90 days from the whether that's 30,000, and then the next month you get another 30. Now you're trading 60. Well, this 30 is only good for 90 days. Well, this 30 is good for 90 days. So in day 90, you'll have you'll draw, if you don't add any more allocation, you'll be at just 30 for the next 30 days. Does that make sense? So every time you receive allocation, it's always good for 90 days. And you can receive allocation every single month and keep going for that. But at the end of 90 days, you're going to get paid for that previous allocation. So at some point, you'll get a check every single month, as long as you're receiving allocation every month. Does that make sense?
Yes.
Because it's good for 90 days. So your performance over a 90-day period, then you'll get paid out. So the challenge or the quest for you and for everybody is to receive allocation on a monthly basis. And then eventually you'll get a check every single month.
Yeah. And
Dave, so is the allocation ticking from like the first time you get allocated, you got 90 days. And let's say you get more allocations along the way. Where at the end of that 90 days, they're still looking back at that first 30K allocation.
That's just that's what you'll get paid on during that quarter. Does that make sense? For in that 90-day period.
So I mean, so from the first 30, is it only going to be paid on the first 30K allocation, or what
Or
you've
the
done
sum.
for the right?
It's going to be paid on that 30K allocation. Now 30K is the least you can get, right? 30K is just, if you hit 75, you're guaranteed to get 30K. But I think you got allocated more than 30K, right, Nick, on your second allocation?
my first allocation was 50K, and my second allocation was 30, and then I didn't get an allocation in March, and then I just got another 30 from April. So I've had 110 total, and I'm at 60 because the first 50 just expired because I got it February. So it was good for February, for March, and for April, and then it went away.
And a lot of these little specific questions that we have that I'm going to throw out a disclaimer. When this comes to payouts, all that kind of stuff, we'll have a Q&A with one of the owners next week, and we'll dial it in. We'll know for sure. So everything we say is what we believe, but we'll get it straight from the horse's mouth next week. So we'll have a better understanding for sure.
Nice. Yeah. And like interestingly, like even in February, I got an allocation and I only ended up making 0.43%. And I might, because of what Dave said, like maybe I got into allocation range and then dropped it back down. But I was surprised that like basically I just, even using the calculator, it showed me making money, making allocation as long as I didn't go negative, basically. So I don't know, like if it was because I made the 75 or if it was because I didn't go negative, but even with this like 0.43% return, I had 30,000 allocation. And it's been nice to see things as a monthly view. Like I think we've talked about trading for the week, trading for the month. This is like this is what all you can see. So it's been kind of cool to have like a losing day and then come in and look at your monthly stats. Or like right now, like you know, with our prop firms, if I had lost 5.97%, I would have blown up the count. I wouldn't have that prop firm anymore, and I would be really upset, and I'd be set back, and I'd be starting over on that prop firm. But like, it's like you can look at this from this yearly view right now, and you can see that this isn't that bad. Like, I mean, I had 6 in January, 4 in April, and I've almost completely made up for this blip, and I'm on track. I mean, I'm probably like, if I were to keep up this kind of pace, I would probably do pretty well for the year, which is like kind of the point. And that's more in line, I think, with like what trading is supposed to be like.
That is the point. I don't know if you've seen this before, but there's also another section in here where it tells you what you need to get to gold. And gold is it your goal should be gold. And when you hit gold, you're no longer 30,000. You bump up to the 500,000 $1 million trading, and it's over here on the side somewhere. I'll have to look at mine, but it tells you what you need to hit gold, and it's 20%. This number needs to hit.
Here something says stats to participate in gold.
What's that? Oh, right there.
Box over here. I'm at 8.38 out of 20.
Yeah, you're 8.38, 8.39 right here. This needs to be to 20, and you can participate in gold. So 2 things need to happen. You need to be in with Darwin for 8 months, and you need to hit 20%. You're tracking really well for that. Do you know what I mean?
Mm-hmm.
So come August, I could see you getting into gold, and then we'll talk more about gold on on Friday, but that's when the real money starts to come in, right? So you're tracking really nice for that, Nick.
Nice. Wait, which is like that's encouraging because of like, you know, March was really hard. I mean, like I think a few of us have talked about it and been like, it's discouraging. You're like, do I even know how to trade? Like nothing seems to be working. And like, yeah, like looking at it from this view and like what Dave's saying about still being on track for gold is really encouraging. It's like, oh, well, you know, it was a tough month, but like we're still at it and it's going okay.
But I really like what you said about you hit 6% drawdown in March. What other company is going to still be like, well, I didn't screw it up? Do you know what I mean? I didn't screw anything up.
Oh yeah, totally. It's a totally different feel being in your MT vibe and it drawing down, and then like that's it. Then nothing happens. Nobody shuts you off. I mean, you know, I have a little different experience because I was in the original 5 to 50K when I had a bigger drawdown, and then I have had something else. Oh, the FTMO. When I did the FTMO demo, you fail the challenge, but they don't cut you off. So I've had a couple experiences, a couple accounts that let me go further than the hard 5%. And I've been able to like kind of see that there is a point that I can pull it back like around 6 or 7. And like, I can tell the turn's coming. I didn't put my trades well enough to keep my risk low, but I still feel like the turn's like right there. And yeah, like I'm misallocated. It's like my drawdown 7%, but it's still in play to me. And Darwin lets you actually like see that through. Whereas these other like somebody like that's different than somebody that's just hoping and praying. And I have done that as well. But like Darwin will let you do that too. Like, I mean, I've had it draw, like I said, draw all the way down. Like there's been times where I'm like, it's gonna turn, and then it didn't turn. And I didn't cut it like you should cut it. And it's like sitting at -20. And I'm like, well, now I'm just gonna have to like leave this running for a month until the euro decides to come back up again. But anyway, all that to say, it's a weird feeling because in a prop firm you would have blown it up, and you still have that PTSD from blowing up your prop account. So you're like, oh no, and then it's like nothing happens, and you're like, oh, okay, well, I guess I could cut it or leave it, or it doesn't really matter. But yeah, and then I think there's something Dave found out about 45 days, letting you kind of like, I don't know if it's like a rolling period of 45 days, like it's only the last 45 days that it's looking at to determine your Darwin risk, but
It is. It's the last 45, right?
okay, so you can totally, so that leans also to just trade your strategy. You have a strategy, and even if you make mistakes, and even if it's like doesn't go well a couple times, like just trade it every day the way that you have it planned, and it'll work itself out. Like the risk engine will figure out like what kind of risk level you need, and it will take care of you. And then assuming your system's net profitable, even a little bit net profitable, you'll see that like eventually it'll like iron out. And I think that's their goal too. Is like they want to help us become good traders by having a lot of built-in forgiveness and a risk engine that keeps you from going to 100%. And yeah, so I mean, I think like where I went wrong with my Darwin is like I was really nervous during the calibration phase to ruin it, quote unquote, ruin my Darwin. And then whenever it didn't go well, I was belligerent. Like I was like, again, it was a different way of ruining it, but it was like, then when I felt like I had ruined it, I didn't care about my Darwin anymore. So I think if you just trade it and you just don't stress too much about it, I think it'll take care of itself in a lot of ways.
So kind of a question along that lines. When we, our basic strategy is if the market goes against us, we layer in, we fade in some trades, and there's times where we fade those in and maybe we get a little heavier because we're confident that we're going to see, well, for two reasons. Number one, we're trying to bring our break even down, but we may be also confident that we're going to get that turnaround. Do you see them penalizing you in any way by doing that?
So it that kind of depends. I mean, like I think if you were doing that in the calibration phase, and you're so imagine like you're within like parameters. So like maybe you layer in, but you don't get more than like 20 trades or something. And that's like kind of your, like, you're like, I went in, I was wrong. I went in, I was wrong. I went in a little heavier. I was wrong. I went in pretty big here. I'm wrong. Okay. So it's like if during calibration you were doing that and you have like a place that you cut it off and there's like kind of a bracketed, I think you'll come out of calibration with like a corresponding risk ratio where they've said, we know how risky you are when you do that kind of thing, like max risk. And we've already pre-accounted for it. What happened to me was I didn't do that in the calibration phase. I traded very small and I almost had no drawdown. And then when I did that, Darwin, I imagine it, like I personify it. Darwin was like, what's happening right now? This guy is like 10 times bigger than he's ever been. Something's up. And they immediately live trading started, the risk engine like kicked in while I was trading and started doing stuff. Like, and it's not obvious. I know now to come here and look at this and to see, oh, my contracts are off. Like this, it doesn't even match the multiplier. But it was like while I was mid setup, I was adding, and it was at first it was adding slower and slower. And then it just stopped adding. Like I was adding to MT5 and Darwin was not copying anymore. It was like, you're cut off, you're irresponsible. But so I will say you are kind of quote unquote penalized during that setup. But once that setup's wrapped and you're done with it, and Darwin like basically adjusts your risk to something that like kind of matches what you just did, then as you're layering in, it tracks that multiplier pretty well. Like it's not until I go out of bounds from what I've normally done that then you feel like you're being penalized because it's like starting to do things live. But yeah, once you kind of are inside of your normal trading behavior, I feel like everything's kind of predictable. And if your normal trading behavior is layering in, like right now, I could get pretty heavy with no consequence because my multiplier is so small. Like it expects me to be I mean, like if I treat it as like 4 times the 6%, like it's expecting me to be like all the way up to 24% drawdown. So it's like cool with me going all the way up to like a 20% drawdown before it feels the need to step in on my behalf. So now I can layer in probably pretty heavy without, like I'll look at MT Vive and it'll be like minus 10%, and I'll be like, whoo, and I'll come over here and it will only have been putting on positions at a fourth of that size. So, you know, it's like only at like 2.5% drawdown. So something much more reasonable. So I don't know if that helps, but it feels.
Sort of. One question I have kind of follow up on that is,
Yeah.
if you do it consistently, I mean, because you kind of changed up your
Yes.
strategy a little bit. And but if you do it consistently, I get the impression that they say, oh, this is normal for him. This I'm not going to penalize this guy for trading this way because he's consistently doing it in this fashion.
Yeah. Yeah, I think so. I think it's like I'm not exactly sure. We might find out more about how the risk engine really calculates riskiness. Like it's a little more, I'm finding it more complicated than just how many contracts you have on. But it seems to be related to like contracts and then like time held maybe and drawdown, like all kind of mixed together. But yeah, it's like now I can layer in and nothing really, it just lets me, but I'm always at a fourth of the size. And like I would have to change my behavior and trade smaller for a period of time for my risk factor to start repairing or getting close to. I think you probably want it to be out at a 1. Like that's probably ideal, is that you're trading just the perfect amount of riskiness for Darwin. But yeah, like so yeah, I think I'm being long-winded, but I think what you said is true.
I think for me, what I found, and which is really exciting to me, is that it rewards you for becoming a better risk manager. And when you get into larger money, you know, millions of dollars, you shouldn't be making 1%, right, a day, because you're risking too much. You need to manage that risk. I mean, you can make that as long as you're managing that risk. It's your risk equals your drawdown, your unrealized drawdown. And we'll get more into that in trading and trade talk. But where Nick, maybe you can share this, what you've been successful at outside of the last month, when I think the majority of traders struggled was last month. It wasn't just Nick. I was on a call with Darwin, and everybody was talking about how horrible March was. Right, it was just a really tough month for a lot of traders. And but what is it that you do that you've found that Darwin has liked, that you've been successful in it? Because you've been in the top 100, right? So obviously something that you did really resonated well. And so do you go for a 0.25% a day? How many trades do you usually take? What is your methodology when you're trading Darwin? Do you trade it differently like you do your other accounts? I mean, maybe talk a little bit about how Nick trades Darwin.
Yeah, so it started like I said, kind of like I was very timid when I got my Darwin. Like I was in a calibration phase. It's 10 days or at least 10 trades of calibration. And it was like, we're gonna calibrate your Darwin to be, you know, according to how you trade. So that I was like, ooh, I don't wanna break it. I don't want to mess it up. So I was very timid with it. And my position size was pretty much the same as I always trade, which is like on the $100,000 account, I was trading probably like around 0.5, maybe even less, a little bit less than that. But what I did differently was like, I was very selective. Like I would just come in when the market looked familiar. Like it was like ranging with a lot of levels, not on the edge of an outside range, not right before news. And I would be, following on with the live session just in my prop firm in general. But every now and then I'd go, oh, I need to put a trade in Darwin. So I would like have my Darwin open and I'd be looking for something that looked good. And I'd put a trade on whenever, maybe it's like an uptrend, it pulled back to a nice level. And I just put one trade on and it would come up to an action point and I'd take it off. And I made like 4 pips. And sometimes that's all I did. That was the only thing I did that day. I might have put 2 trades on. Maybe it goes against me and I layer in one time and it comes up halfway and I take it off, break even. There was like no greediness to it. It was all timidness. It was like, oh, I just want the best trades I can find. And I just want some positive pips with the least drawdown possible. And I kept my number of trades on really small. Like I had like 1 on, 2 on. I might put a double layer, but I started getting nervous, around 5 trades. And I kept it really little like that. And that's what you can see here in this timeline. Like this period is me not even trading. Like it's 2.73 for all these days because I didn't trade at all. And then I put on like 1 trade between these 2 or 2 trades or something. So, and then no trading in between here. And then a little bit of trading, no trading at all. And yeah, it worked. I mean, it works. It's like Dave said, Darwin rewarded them. They were like, hey, we'll multiply those. And I would be getting like, 0.05, 0.10 in my MT5, like something really small return wise. And then Darwin would multiply that out. It would be about 0.25 a day every time I traded it, but I didn't even have to trade it that often because the bar was so low. Then in here, I was like, oh, this is going so good. And I started trading way more often. I think Rob was getting everybody all hyped up on everything. So this is where I started like changing my trading probably. And then you can see I started having like some drawdowns in here. And then this is March, like these drops, these sharp drops.
You started taking more risks.
Yeah, I started layering in. I started holding on
Losers.
Like, yeah, like if you say like I put on a trade and it dropped down and I put on another trade, normally when it came up in between those, I might take off the whole setup for break even. But I started being like overconfident. I started thinking, I'm just gonna wait and let it play out. It might drop another level and I'd put on 2 or 3 because now I want out, and then it comes up a little and I don't take it and it goes down again. And I'm like, now I gotta go in even heavier. I started trading with like kind of more of like a hope of hitting a big winner instead of just consistent like base hits, which is what I was doing to start off with. And yeah, and then like Darwin saw that as like, man, you're taking a lot more risk, per setup. And then some of them don't work out. Like you're not out of the market. Like I was always out of the market. I was only in for short periods of time. Then I started being in for way longer periods of time. And like Dave says, something inevitably happens. And now you're upside down, deep upside down. And now it's like, oh, my pristine Darwin, I don't want to take a loss in it. So I'll hold. And so that's where, that's this piece, this downhill piece.
So Nick, do you trade the news at all?
Yeah, I do lightly. So I'll try to be out before news. And then I might, like on a big spike, I might put like 1 or 2 trades on and then take them off at 50%. Like I haven't historically been like that great at predicting the news. So for a lot of this early period, I didn't trade the news. In here, I did trade the news, and you know, it was basically just like having 2 or 3 setups instead of 1 setup, because it's like, you know, it moves double the pips basically. But and you can trade the news if you want to. I mean, Darwin doesn't care what you do. You can do whatever you want. They don't restrict it.
That is the nice thing about Darwin. It gives it very forgiving for mistakes, but it's very conducive to, if you don't recognize your mistakes and you continue to make them, very conducive to becoming a risk manager. And honestly, that's, like I said at the very beginning of this call, was the more I dive into it, the more I love their model, because it's not about slapping your hand if you get caught in a bad run or made a trading mistake or something like that. It's about figuring out the best methodology that's going to provide consistency, and that is being a good risk manager, is consistency, right? Is Pete there?
Right.
Pete, you want to chime in here, Petey? What Nick said that Pete had
Oh, there.
he had a presentation ready, but now he doesn't have time to give it.
I didn't have a presentation ready.
Oh, you weren't here at the very beginning.
The only thing that I would add is, if you're starting into Darwin, I think my allocation period was pretty much the opposite of Nick's, where I think I joined Darwin that first week in January, and I was trading normal as we had all of our prop firms on. So I copied Darwin into my other prop firms. And so however I would do on prop firms, I would do on Darwin, which is, you know, quarter percent, 0.5%, that kind of stuff. And then when you had a bad day, when that happened in the allocation, I kind of started off on the wrong foot. So in hindsight, you know, now that we know a lot of the stuff like about this, I think I came out of allocation at like 0.48 risk rating down here, and then it, you know, quickly through January, February went down to, you know, 0.3, 0.2. And so now what I've done is my my rating my position has improved tremendously. My rating was down in the 50s, and now at the end of April, it was it cracked like 72. So I was trying to get that up to 75. But there's a big hole that I'm digging out of, which was this rating factor, because so I have a 0.11 rating factor because of everything that I did in February and then half of March. So I really like, I don't want to say I hit rock bottom, but things started to adjust from halfway through March to April. So if you could learn anything from what Nick and I have done, or Josh and Robin have done, or Dave's journey, all of us, you know, we were you know, trying to succeed in the prop firm challenges, which is a different kind of a trading animal than Darwin. And so if you can kind of do what Nick did, which is you know, over here, take these little bites and not trade for 1% a day and lose 5% and all that kind of stuff, you will come out, you won't have to work as hard as I do. So right now, you know, as I get 1% and 2% a day, I'm actually only getting 0.25% on 2%. So if that makes sense. So that'd be my only advice is, I really liked how Nick explained the entire platform. And really this, you know, this rating here is probably the most important thing. And the other thing that I think would be, it gives me a lot of encouragement, would be, like Dave said, 30 days out, 45 days out, 6 months out. This is the long-term goal. So we all saw these prop firms and they were like maxed out at 100K or 250K. And Dave has pointed out numerous times, the more consistent over time that we are, the, you know, 1 million, 4 million, is, you know, 13 million is is the window in the gold that we can hit, but it'll take 6 months and 9 months. And I think most of us now are okay with that timeline.
Yeah, I appreciate that, Pete. Thank you for sharing.
I-
And you're absolutely right. Go ahead, Brendan.
Sorry, I'm trying to reconcile something here because because of the leverage, I've already dialed down my trade copying ratio into DarwinX. And the thing is relative, even though because it's a 1 to 30 leverage, and because I'm using smaller lot size inherently, my risk, how do I want to put this? My default trade, I target 1/4%. But sometimes because of how the market retraces, I take advantage of that and I get more than 0.25%. And so I don't want to dumb down my trading to accommodate DarwinX. But on the flip side, my only other option I feel like I have is to tune down the ratio even further. I'm trading 30% of what my parent account is sending over to DarwinX. So do I dumb it, or do I tune that down even more to 0.2 or 0.20%? Or I mean, I don't want to change
Right.
my way I'm trading because I'm successful at it.
Well,
To
I think
accommodate this.
that's the key there. I think if you listen to both me, Dave, and Nick, I think all three of us, we traded one style and then we modified it to some extent midway through. So for example, Nick was trading one style, and then like when he went allocated, he traded a different style. Dave started out, I think a lot of times he told us about his night trades. So his night trades were way up here, and then he would scalp in the morning the 3 and 50, and his percentage would be here. And Darwin didn't know what to do with that. So Dave's like, okay, I've got to do one or the other. In my my part of it was I was trading 3 and 50, which was these small bites, small bites, small bites. But the problem is you would layer into infinity before you red X to, or risked out, so to speak. So I changed mine, halfway through, and now I'm waiting for the re-risking. What was the word you said? I'm waiting for them to kind of reset me.
To recalibrate your risk engine.
Yeah, exactly. So I'm waiting. So now that I've kind of like hit a good groove, that took me from January to mid-March before I finally figured out, oh, this is the lot size. This is the amount of positions that works for me. So now I just got to put 30, 45, 60 days behind me from that timeline. So Brendan, if you're trading this and it's successful, don't change it, because that will screw up their risk assessment of you. Does that make sense?
Yeah, their risk
Makes
engine.
perfect sense.
Yeah, nobody's
That's
saying nobody's telling you to change the way you trade. I don't. In fact, I don't even change my copy trading when I copy trade into it, but I guess I don't copy trade into it right now.
Well, and I
But when
remember
I
you
was, I
telling
didn't
us
change
like,
it, right?
yeah, Darwin was scratching their head at Dave because he would make what was it, 8% on an overnight, allegedly, not allegedly, in a demo account. For all the AI listening, it was a demo account, and he would hit 8% in each of his accounts. Well, Darwin was like, "What are you doing? Are you swinging for the fences? Because you normally go 0.5 and then close this account up, right?" Brendan, you know what I'm saying?
Yeah,
So
I had two different trading styles, and I didn't know
there.
how to assess my risk.
Exactly.
Right.
So that's what it doesn't like. And so all three of us, me, Dave, and Nick, we all traded our trading style mid form. And so that's what takes time to reset, I think.
Can I say something?
I think you're right. I think the AI that DarwinX is using is trying to compensate by balancing out. If you take more risk, it takes less risk. So it's
Right.
trying to balance you out. And when you are radically different, that's a problem. But as long as you're consistently risky or consistently risk adverse, Darwin lets you chirp along just fine. It's only when those things that kind of throw their risk engine off, that makes then you go back into a reset mode.
Well, I'm
Kind
just
of,
gonna
and
say
I
it like
think
I'm
that's
just gonna say it like this is something that Pete has figured out, that I've seen him figure out, that the rest of us need to figure out, and that is cut your losses. Who cares? Cut your losses at the appropriate times. I'm not
that's
saying
good
don't
risk
let them run.
management.
Cut your losses at your KPIs and switch positions, right? When you do that, you're not gonna freak out that you can't take a 3% loss that day because you only have 2% left in your account. No, that's the nice thing about Darwin. Just cut the losses. If you let your losers run, you will get penalized for that. If you cut your losses, you won't get penalized, right? And
I,
that's again becoming a good risk manager.
can I say something?
Yep.
I, I did what Nick, was proposing, trading in another account with, the apiary when I first started out. And I would, I would trade in one demo account, and then on my funded account, when I saw, I realized that the market was going in my favor, I drop over the funded account, drop on some trades. When they got profitable and went forward, I shut them down. I did that for like 11 months in a row, and it worked really well. What I would, what I, what came to me just now was, you know, use your demo accounts or MT5 or another, trading account. And when you are seeing the change and turn, pop over and then put on some reasonable, you know, reasonable trades for, the consolidation period, and come out with a reasonable profit and a percentage, risk percentage, and use that for, modifying your behavior in Darwin X going up. I
Or
think that
you,
makes perfect sense.
well, I'll dive more into this on Friday on my call, but on like strategies that I would use and uncover for trading Darwin. And I can showcase you guys some numbers and things like that. But honestly, I've just been using Anubis to trade it the last couple of months, and my stats have been really good and consistent because it goes for the 1/4% every time, and then it closes it, then starts all over. Never usually gets more than into the mid game that we talk about of 20 trades, gets that 1/4%, starts all over, 0 to 20, starts all over, very consistent. Hits the 1/4%, gets that reset to 0, start trading again. Very consistent. And I've just been using Anubis to just run my trading over there on Darwin, right? And I might not ever hit number one in the entire Darwin, might not ever hit, top 50 or top 100, but it's moving forward. And kind of the last thing I would probably want to showcase, Nick, is if you can hit this right here where it says Darwin IA. This is really interesting to me and kind of cool that Darwin is an open book. Not too many companies will share this, um, because people can misconstrue stats, right? And with stats, they can show whatever they want. But if you look at this, this person is number one out of 7,500 people. Darwin, because of the whole prop firm mishap, they have a lot of new people, a lot of new traders like you guys that have just now seen what Darwin and are now catching on to the Darwin. And so there's not a lot. If you scroll down really quick, this guy right here, no, scroll down on this side over here, this guy's information. You scroll down really quick and you go to his position, the very number one guy today, all he did was made 6%, close to 6% today. But guess what? He's only been in for 2 months. And if you go to the second guy, they click on the second guy, well, he's only been in since December, just like us. And I was clicking through a bunch of them. There's not very many people who have more than 6 months of trade history here with Darwin. And so that's why they're pushing the longevity of it. And if you go to here, go to this guy's position. It's a really good track record for what we're trying to do. right? Look, he's had almost a 5% max drawdown. His very first, like, hover over these little trophies. His very first was kind of like Nick, 75. Then got a little bit of allocation. Then I don't think he got an allocation there, or he got 30. And he just is like, this shows you just getting allocated every single month. His best one was 11, right? And you can go and you can see these guys. But if you click over here and you scroll up really quick, scroll up. So we got 7,500 people in silver, and then go to gold. This is where it really shrinks. You have 164 people in gold. So one could say, well, they don't have a lot of people in gold. But one can also say that they've just experienced some hyper growth in the last 3 to 6 months. And they experienced hyper growth. And a lot of that growth isn't going to make it. But if you can be one of the 164 in gold, you just click on one of these guys and see their allocations. It's gonna be easier to receive allocation when you're in gold, right? Because your competition isn't as fierce, and you have investors wanting to invest in you. And you can see this, that they're getting this allocation. This guy's been with them since November, been gold since November. And I was able to pull back the curtain a little bit, and maybe I'll ask Ignacio to do that with you guys next week. But I'll be able to see where somebody started, one of their very best traders who had like a 13 million in allocation, for like the first 7 months of their trading, they received zero allocation. And then in the next 4 months, they went from 0 to 13 million because they hit gold. And that's when their trading really took off and unlocked gold for them, right? So you could technically still hit that 20% and receive zero allocation if you're making 1 to 2% a month, right? It's not going to be the ideal way. It's not going to be awesome, but you could receive zero allocation in silver, jump over to gold, and the next month you're trading, in the millions of dollars and stuff like that. So that's really what it comes down to. And I'm not trying to tell you guys that that's the path that we should take. What I'm trying to tell you is focus on everything you trade in Darwin is not for today. It's for your track record. You're building a solid track record, right? Who cares if you make a 20% return in a day and then lose it all tomorrow? You got to find a consistency and balance, right? And it doesn't matter your trading style. If you're a bus route like Nick, or a jet like Duke or Ed, doesn't matter. Just be consistent with that style, right? And you'll find a path to money. And that's the best part about Darwin. And the part that I get really, really excited about is that I can help you guys to become better risk managers. And that's what I get excited about, is that I can change the conversation from, well, how close are you to losing this prop firm account, to that conversation doesn't exist anymore, right? That conversation
So
doesn't exist anymore.
I think that's where speaking for myself, I'd like some clarity about what that means to be a risk manager, because I'm hearing one thing. I'm hearing, despite how heavy somebody might be, if you're a jet or you're a bus, that as long as you're consistent at it and you're good at it, then you'll be rewarded for that. But when I hear people that are more on the jet side of things, that to me feels like risk. And so it would be good to hear a definition of what Darwin X thinks risk is, so that we can tailor our trading around that.
Yeah, I think we can ask. Probably,
yeah, I think that they make it very generic. As long as you're making 15% a year, then you're going to get rewarded. That's what they want. They want that. And I've asked that question, and I said, well, tell me how to do it. What do you guys want? What are you rewarded for? And I haven't really been able to. I feel, this is personal feelings, I feel, because I'm not talking to the trader, that if I was talking to the brother that's the actual trader, he would be able to shed some light on that. So, but maybe we'll get more information. because I feel like I get the generic answer of just make 15% annual and be better than the S&P, and you'll get into gold and get rewarded. That's the generic answer. But you're right, Brendan. I want more specifics. Like, I can tailor my trading style to whatever's conducive to this. I just don't know, and it's a guess. It really is a guess. Like, why did this person get to 1%, or why is he ranked number 4 when he made, I mean, again, we're only talking day one, but still, what did he do? Right? What did he do to get a high ranking? And I'm confident that we could duplicate that, whatever that is. But I don't think that that's really shared. It just do better than 15%. But we can dive into the risk engine and get more ins and outs than today. And that's probably more reserved for the call to Darwin versus Nick, right? And asking
Yeah.
them those questions.
I'll say, like, what I've used is, like, it's not a perfect measure, but like the 6.5, like VAR is not drawdown, and there are some videos Darwin has published on like what is VAR, how's it calculated, but I've basically just taken that 6.5 and said I want to not, like, in my head I was like, if my max drawdown is 6.5, then I should have a multiplier of 1. Like, that's kind of how I did it. And if my max drawdown is like 2%, which is what I normally shoot for when I'm trading in my prop firms, I'm like, I don't want to draw down more than 2%. Then 2 is, 2 times 3 is 6. So I'm like, oh, I should have a multiplier of like 3. If I keep it in, like, my drawdown is around 2. So I think if you've been successfully trading in a prop firm and you're not blowing it up at like 5%, you're probably going to have like a positive multiplier over, like, bigger than 1. So I think your trading style, if it's working in a prop firm, is probably good. And like, it seems to kind of track like the 6.5 thing, because it wasn't until I started letting my Darwin draw down into like 10, 15, 20 that I saw the multipliers start going below 1, which kind of matches the 6.5.
I guess my only concern is the only thing that I could see is risk on my side with my trading with Darwin is that I am getting down to 100% leverage in some of my trades. And so as I fade into my and let the market come back around. So I don't know if they look at that leverage and say, "Whoa, you're at 100% leverage. That's too risky."
Yeah, I'm not sure. My intuition is that it would read as more risk because just the size itself. Like, I feel like not a lot of people have the concept of like what we do, where we're like, we can go in really heavy at the right time in order to be able to get out of everything and save a position. I think that's kind of, most people from the outside look at that as like a crazy thing to do. So you're right, it could end up, so that might be something we could ask the guys, like, hey, if I go full margin, is Darwin going to treat, and no drawdown, just if I just put everything on and it's gone like 1 pip, does Darwin read that as like a really high VAR or no? Like, that's probably a question we could bring to that guy.
Yeah, I agree, and we're gonna do that next week. I don't have a time yet. I will schedule it next week. I'll have that scheduled. So, but these are great questions to ask Darwin. But tonight's presentation was about how awesome Nick is. So let's just keep it on that.
I really want to brag about my allocation.
And Nick, you're awesome.
I did it without even trying.
He did it with his eyes
Well,
closed.
and like
one monitor.
I'm still trying to understand Darwin, because April 30th, yesterday, if you look at like this number, Nick, if you scroll down just a little bit, the magic allocate, there it is. The magic allocation number is 75. And so mine was like 72 point something. And then I woke up this morning and it had dropped to like 65 or 63 or
Oh,
something
you
like
weren't
that.
here when he answered that. Dang it. I was hoping you
Oh,
were here because I knew you had that question. Today's a new month. Everybody starts at
yeah.
that.
Oh,
Everybody,
everyone's
it's a reset.
gotcha.
So everybody drops and everybody's current position defaults to whatever you do today, right? And so that's why I'm like the person who's in first place only made 6% today, right? And he could lose it all tomorrow and drop all the way out of first place. So your position, your rating, it all resets on the first of the month, right? And
Well,
I
and
think
the other thing I liked
y'all get
about,
started around 60 or whatever, right?
yeah, and you know what Dave has stressed over and over again is stats, stats, stats. And so I don't know if Nick pulled his up, but as he was going through all this stuff, the score, what's that score called? I'm blanking on it. Your trading
Sharp
score.
ratio.
Yeah. So your Sharp ratio. So like this is a real thing, regardless of um, regardless of any of Darwin's parameters. Like you still have this Sharp ratio. So after 4, 5, 6, 8, 10 months, as you're learning to trade and you're learning the ins and outs, like this thing is your your fingerprint. So keep trading
Yep.
and don't flip flop accounts if you can help it.
Yep. Yeah. And I know there's some cool people here, and it's like, absolutely, I would still copy trade into Darwin X, because you don't want to change the way you trade just because of one thing. You want to find the system that is a good risk management system and trade that way. And that's what I keep saying, is like, I'm excited to shift the conversation more. And when I mean to more of a risk manager, it means protecting your account for your trading for the week, the month, the year, versus you're risking too much on the day or that one single trade, and starting to realize, and this is speaking to you, Nick, starting to realize that you don't need to add a ton to save that trade. You don't need to win on that one particular trade. You don't need to add losers or add trades to your losing, to your running. Just cut them. Just cut them and come back and fix it later. Right. And that's what I would say to that, because you're protecting your account by doing that, right? So
Absolutely. I think you're totally
um,
right. Like it's not working out. I'm just gonna get out of this and wait.
and wait for the other, wait for a better setup.
Yeah, it's a much better like long-term play than like I have to win on every setup that I have.
Yeah, Ignacio, the owner, one of the owners of Darwin, told me this. Actually, no, it was his other brother. I can't remember his name, but he's the one that deals with he deals with getting money for the investors. And he told me that they can tell who a good trader is and who's not by how long people hold on to their losses.
Oh
They
wow.
know, because people who hold on to their losses are more stressed and trade higher risk than people who just cut their losses and they have no low stress and they jump back in later. Right.
Yeah,
So
right.
they look at that. And I don't know, like, I didn't really get into the nitty gritty. He was just sharing it. I'm like, well, how much does that calculate? I didn't talk about that, but I thought that was interesting. But that's one of their key factors, is how long do you hold on to your losses, or how long do you let yourself be in drawdown? Do you know what I mean? Now, that is not necessarily, that doesn't really relate to the way that we do things and what trade the fund, because people can hold on to losers for weeks, and we usually will hold on to them for a few hours and then risk out. But now you don't have the option to risk out. So are you holding on to them for days until it swings back? Or are you cutting them once the KPI crosses? And the latter should be what we're doing. And that's what I'm talking about, helping you guys to become a better risk manager. Is like, oh, you know what? It crossed. Let's get out and let's fix it somewhere else. Right. Anyways, I don't need to keep you guys here longer than we have, but appreciate you jumping on, Nick, and saying that. Right.
Yep. Thanks, Nick.
I
Yeah.
appreciate that.
Hope it was helpful and
Thanks,
demystifying.
Thanks Pete too as well for adding your 2 cents. Thanks Lee. Thanks Lisa.
Thanks, Brandon, for saying that Nick Kobashi did
Thanks,
awesome.
thanks Brandon. Thanks Edmund. Thanks Hilarion. Thanks.
Sorry for manipulating the conversation.
Oh, you did? I didn't notice.
Yeah, sure.
No, I do think you have good questions.
No, yeah, your questions are great.
But I don't think that they were going to be answered here, right? Because I
Well,
like your questions, right?
And I didn't ask them thinking that you guys had all the answers, but I mean, those are the things that are on my mind. I mean, you can't teach us how to be a risk manager if we don't know what the rules are, right? And so that
Yes, you
as
can. That's what I did. I mean,
I agree.
because I think I'm not teaching you how to become I'm not trying to teach you to how to get your Darwin risk engine multiplier. I'm not teaching you that. I'm teaching you how to, at the end of the month, at the end of the year, to have a positive return. That's being a good risk manager. That's what
okay.
I'm
So
teaching you.
let me restate that because I was thinking risk management equaled being meeting the best the opportunity within Darwin as possible, and that's what we can't do. We if we don't know
Right.
what they're grading us on, how can we get the right grades?
Yeah.
Do the right thing. So that's what I am thinking.
Yeah, no, and I agree. I had the same thought. Like, tell me what game I'm playing so I can play the game, right? But I don't think they want to tell you that. At least I asked that question and I've gotten vague answers, right? So we can ask again. I think that they're like just trade your style, just be better than the S&P. Those are the vague questions that I get, or the answers that I get, right? So with that in mind, I'm like, all right, just be a good risk manager. Meaning at the end of the month, did you make more money than you lost? And honestly, if you look at it from their perspective, they could care less what your risk is as long as you're making money, because they can sell you to investors. And I'm the same exact way, putting myself in their shoes, which I'm going to be investing into you guys when I can start seeing your stats and we get gold. I'm going to invest into trade the fund top traders. And I don't care what your risk, parameter is. If you make me money, I could care less if you're profitable at the end of the month. And that's what we need to focus on, just being profitable at the end of the month. Right. And that's what I'm excited about doing.
Dave, I wanted to show I looked up your Darwin, and this is your grid. You remember mine, all those squares I had? And look how narrow your distribution is.
So we're playing a different game. You're playing Tetris. I'm playing.
You're just like, you always
Chutes and
win the
Ladders.
same amount of pips, no matter how long it takes, and you always lose the same amount of pips, no matter how long it takes.
That's your yeah. I'm playing Jenga. You're playing Tetris.
It's almost like you have a 10 pip take profit.
Well, I don't think you can look at mine because honestly, I'm letting that computer trade it. So
it's just so interesting and clean. Like I was like, what is this?
I'm not letting a computer trade it. I'm just letting it trade the Anubis trade.
Your computer is very consistent. It looks like.
Yeah. Well, right now it's actually in 3 trades. So we'll see how that works. And if it pops up another 5 pips, it'll hit goal for the night and be done. So, all right. Well, with that, guys, thank you guys for holding on to go past the time. I know some of you guys are wanting to get to bed, so let's do it. I'll see you guys bright and early in the morning, and I will be there. I'm feeling a lot better, so I'm excited to take this journey with you guys, and I really, really, really am excited to start promoting you guys as some of the best traders that Darwin has to offer. So we'll figure it out and we'll get there together, and more goodies will be coming your way for being a Trade the Fund and Darwin trader. So jump on now, because you got to get past the 6 to 8 months. And I'm trying to figure out a way to help you guys get there as fast as possible with the least amount of risk to your pocketbook. So those are my two objectives. So we can hit that. Let's get it and let's get done. So, all right, guys. Thank you guys. And we will see you guys in the morning. Good night.